As futures inked into the red over the weekend, foretelling a Monday decline in traditional markets as well as in cryptocurrency markets, which we do certainly see playing through right now, we kind of obviously look for a reason why, and it's fairly clear. It's renewed fears that COVID is flaring up again and threatening the global economy yet one more time, like the threat ever went away in the first place. Probably the most disturbing reports coming out of China, where Beijing is seeing a pretty significant flare-up, and they are taking a pretty severe reaction to this. Now, with regards to isolation away from that particular region, it's unclear how this will impact the sentiment of the global markets, particularly in the Western countries. However, it is certainly a fear. Now, we're not seeing a massive sell-off because we're still seeing the retail flux of bullishness run into the markets. But we're going to take a look at a lot of data metrics today, particularly in the realm of cryptocurrency. We have the largest options expiration ever in Bitcoin history coming up on June 26th, still skewed to the long side. Calls with strikes at 11,000 are still quite popular. However, $7,000 strikes have kind of come into play as well, and those have been slightly on the rise. So open interest looking pretty good. A lot of fundamentals still looking quite bullish. We are going to be looking at Mr. Vitalik Buterin's lambasting of PlanB's stock to flow model today, and we'll kind of break down, how do we feel about the stock to flow model? What are the errors with that particular model, and what's good and what's bad about Vitalik's particular take on this? However, we're going to cover all this and more in today's exciting episode of Breaking Bitcoin. Stay tuned, guys.
Hello everyone, my name is Silvio Micali. I'm the founder of Algorand, and I'm proud and happy to be here with this edition of Breaking Bitcoin.
Welcome back to Breaking Bitcoin, everybody. This is your daily source for everything markets and personal finance. Today is June 15th, 2020. Beautiful day. Hopefully everyone is doing fantastic today, wherever you happen to be and however you are tuning into us this afternoon. Today's show, as always, is brought to you by the Cracking Cryptocurrency Premium Trading Group. With resurgent fears, with market volatility beginning to edge up, there has never been a better time to learn how to navigate the markets. Whether you're interested in cryptocurrency, Forex, stocks, derivatives, the Premium Trading Group has you covered. Join our community of professional traders and learn to build your own objective data-driven strategy, and learn to stop relying on other individuals. If you're tired of being guided astray by crypto Twitter or Telegram, or watching poor management of your trades sap away your progress, make the change and join us at premium.crackingcryptocurrency.com. That's premium.crackingcryptocurrency.com. Links in the description down below. We've got a whole lot to talk about. We've got an update for you guys on the Bitmain Antminer fiasco. We're going to be covering the broader markets, looking at everything today. Obviously, Bitcoin having a pretty scary plunge down to the $8,900 level. Now, I know what you guys, the bears wanted 8,800, but you guys got 8,900. Them's the ropes. Shorts certainly do seem offsides as we move into the afternoon trading session here on Monday, with the rest of the markets, pretty much doing the same thing. Kind of a scary start to the day, but so far not a whole lot of follow through. So we'll break that down as we cover the Forex pairs and as we cover our traditional indices as well, and glean what evidence we can of future movements from them. Overall, sentiment in the market still remains relatively bullish, as the froth around all the hedge fund managers and smart money is now dumb money, and now retail is now smart money. This is the new norm. So we'll break all that down. If you guys have any questions, make sure to drop them in the live chat. We are, of course, live streaming to you, broadcasting from the above ground, quarantined, previously underground, but now gardened, terraced, and trellised, Cracking Cryptocurrency shelter. If you guys enjoy the content, make sure to subscribe to this YouTube channel, hit the bell icon, and smash the like down below as we continue to get going. Let's go, guys. Hopefully you guys are awesome. We've got so much to cover today. Boom. Here we are back in the trading view. Before we begin, by the way, guys, really excited. So as you guys know, my big project this month has been and still is uploading the content to the website for our new online trading academy. We're going to have the pathways to profit, all of our risk management material, our technical strategy, our technical analysis courses, all on the website for easy consumption, with nice, with scripts and with quizzes in a nice course layout. It's going to be beautiful. It is beautiful. And we've added a whole new module, by the way, because, it struck me obviously that as I was re-reviewing our material, you did, of course, have to have a certain knowledge of the markets, like a basic knowledge. Like this is what a candle is, this is what a limit order is. And so we created a whole new module for that, right? Which is a nice, introduction or foundational concepts for traders who know absolutely nothing about the market. So now I'm pretty happy to say that although the course certainly will be as all educational material is, if you have some basic previous understanding, but it's now been set up that you can come in and do pathways to profit with absolutely no previous experience in the market, which is pretty neat. Because I'm a firm advocate that systems building and objective technical systems is the best way to learn. Don't go down the route that so many individuals go down, which is why I built BTP in the first place, of discretionary, hyper discretionary, support and resistance, trend lines, Fibonacci nonsense. All right. And I really want to thank senior analyst Alexander as well for his invaluable help with that. So progress is trucking along very, very nicely. I'm going to get modules 3 through 7 this week because modules 1 and 2 did require the most work. Modules 3 through 7 will flow like butter onto the website. Then I'll be on vacation from Friday until Tuesday. And then when I return, all I need to do is cut the last few videos, and I still hope to have that up the first week of July. So with that being said, let's take a look at the broader markets here. Obviously, let's look at our major indices. We have the S&P 500 index actually up a little bit. So we were down just a little bit as we kind of opened up the market this morning, but now inching up about 3.6 points. So relatively flat, but on the way back up, as is Bitcoin. NASDAQ composite up about 56.8 points as well. The Dow, the Nikkei, the DAX, the Nikkei is the only thing that's taking a plunge, which is interesting because we saw the Nikkei kind of up as opposed to the Western markets. But of course, the Asian markets today certainly, I think, receiving more of a little bit of scary selling due to the particular localized fear of the COVID resurgence in that area. Again, Beijing pretty much on lockdown from what I understand. Eli back, thank you so much for the $10 super chat, my friend. He says, love waking up and listening to your show. This week's gamble for me is OK Cash. Staking rewards move up to over 24% in the next week and a half. Should see more hodlers. Average price, 240. Let's see here. Hey, Google, remind me to buy OK Cash in 2 hours. Good looking out, brother. All right.
Okay, I'll remind you at 2:10 p.m.
Thank you, Google. Always be nice to your Google, just in case. Well, not just in case, but when the Google AIs take over control of the universe, you want them to know that you're one of the good ones, not one of the bad ones. All right. Listen, guys, you guys know that I call Brent crude, Bentley crude. You guys know that I call the Nikkei, the Nikkei. All right. Listen, you get what you get around here. All right. I'm sorry, guys. All right. I mean, heck, we're gonna call, we call XRP the standard around here. Like, let's get real, guys. Let's get down to brass tacks. All right, maybe silver tacks. All right. Okay. So again, FTSE and the DAX and the Dow leaking a little bit behind, kind of creeping a little bit behind the S&P and the NASDAQ, which doesn't really surprise me too much. Looking over at our currency pairs, nothing really overall fascinating here to see. We do see the Dixie down a little bit, which very, very little, but again, climbed very, very little. Moving into Thursday and Friday when there was a little bit more market fear. So I would say that leans relatively neutral, but does indicate that maybe there's a little bit of more risk on appetite moving into this week. We'll see. Looking at our futures, we do not see gold and silver holding up very well. But again, the market recovering, right, after an initial kind of early morning market open sell-off, right? So gold futures, SPY futures were all down going into the evening. And we do see them kind of trudging back up. Again, still gold and silver in the negative. Crude oil, which was originally just got which just got tanked last week, is climbing back up moderately. Natural gas taking a bit of a hit, and cotton futures still stable. I think cotton futures are the new stable coin. CME futures down about 0.5%, right? But of course they were more earlier. Looking at the index prices for crypto, we do see XRP, Ethereum, Bitcoin Cash, EOS, and Litecoin all down relative to the United States dollar and relative to Bitcoin. Pretty much everything down relative to Bitcoin. coming off of the sell-off that we've pretty much recovered from now, moving into the afternoon here on Bitcoin, with a few exceptions. Obviously, Zilliqua and Verge. And again, so the low sats, the shitcoins continue to perform relatively well compared to everything else. Bitcoin on Bitstamp here, actually up about 0.3%, about $27 from open. So, and that's cool after plunging down from basically 93 to 93.24, which I believe is what we opened up at, down to 89, a little bit above 89. So, pretty good recovery, pretty swift recovery. In fact, I would say a little bit more than a recovery, pretty gosh darned dang diggly bullish, right? Bonds down as well. So again, a little bit of a risk on appetite, kind of starting to come around the circle. A lot of fears that we are going to have a kind of a week of profit taking, but so far I'd say relatively that everything seems neutral as far as market-wide fundamentals for Bitcoin do look good. We haven't had that massive breakdown, and we do see diminishing sell volume coming in. We'll take a look at that when we look at the daily candle. So I'm still not positioned into the short side yet, and I do not think that is actually the correct play. So we'll keep you guys updated on that. In fact, I'm long. So. All right, let's take a gander here. We do see the ask wall starting to beef up just a little bit. Other than that, not too much. Trading Views TA wants us to be in a sell, just a moderate sell, not a strong sell, but just a moderate sell, which is relatively interesting. And we're up toward the upper threshold of today's daily range. Pretty long doji, pretty long wick to the downside here. I do like that near range lows. That does indicate some nice absorption of sell side flow right here. Obviously, shorts got offsides right around here, and some of them, early shorters, the 50x, have been liquidated. Not the 25x yet. 25x will be liquidated nearer to the closer at the top of the range, near the 94.80 to 95.20 region. They're going to get smoked right up around there. So, maybe the easiest way is just kill everybody with the disease. Bottom feeder is still an active signal, and for the second time, almost scaring us with a potential wick out. However, bottom feeder is still active, looking for a move to 99.18. So these are good things. 87.80 was where the updated stop for Bitstamp was. I think it was 90 or 87. It's a little tighter on Bybit, but neither got hit. So anybody utilizing the bottom feeder. And I was a little late. I just updated the sheet this morning. I should have updated it on Saturday, and I apologize to the premium members. But the signal obviously came in here. This was Friday, actually. I apologize. So Friday the 12th, my daughter's birthday, that is when the actual signal fired. We got that second bottom feeder signal calling for the 98.918 and reestablishing the stop loss at 87.80 as opposed to what it was previously. So dual risk, doubled up on the BTC USD long, as well as my discretionary position where I actually got filled at 9,200 so far. So in profit on that as well. But yeah, Jason, like Jason says there, real nail biters in the bottom feeder signal. So good stuff. Let's take a gander here. Let's take a look at Minx. Minx is entering into the oversold territory right here, just kind of crossing into the threshold, which time transformation, for example, would be giving us a green dot of life, indicating that we are entering oversold conditions on the daily time frame in Bitcoin. No crossover yet, so no reversal signal in that fashion. Parallax here is still bearish. Wadatar explosion is still bearish as well. So individuals, again, we talked about this on Friday. So if you guys will recall, on Friday, we were trading. Obviously Thursday we had this nice sell-off, and Friday we ended up having a resurgence and closing positive. Saturday we did absolutely nothing. Sunday we had a down day, and then obviously Monday opened up and we had a nice wick down to 8,900. So as I said on Friday, positioning into the short, I wasn't against. I didn't get any short exposure, but we talked about if we're gonna looking at the breaking Bitcoin system here, looking at the primary system, short calls, short swings were a potential on the close of Friday, right? So anybody that took that trade and waited until Friday's close instead of hopping in at the lows, like I said, was not a good idea. I think that's relatively obvious that wasn't a good idea from anybody. Again, you generally don't go long after a big green candle. You generally don't go short after a big red candle. This is why we do things like candle size violation. This is why we look at things like ATR, and this is why we use things like the qualifying line, right? So as you can see, we closed below the qualifying line, came back up above on Friday, and then Saturday we're still within that qualifying. So either Friday or Saturday was valid. I'm not against you guys if anybody took swing shorts. I know a lot of individuals in the group did. That's fine, and they made some good money because clearly hitting their first take profit target. And while they are not out at break even, they might be if we get back up to that $9,450, $9,500 region, which is totally fine. They made money. They might not make as much as they want to if price reverses from here and fulfills this bottom feeder signal, and they still have some good risk on in both directions, right? Taking advantage of both sides of the market. And again, so overall in net profitability, it's been a relatively good month so far. Alex continues to crush it with altcoin signals, weeding out the losers, letting those go relatively quickly while we still actually have a ton of long-term winners running open. All right, so relatively good. So, as long as individuals, particularly those watching this channel who didn't over leverage and who traded cautiously and who took the positions that trending systems would have indicated for, should have done well, right? Whether individuals are utilizing the bottom feeder, which are still active and actually in profit right now at this moment, or if individuals actually ended up taking the short swing, which I thought was not quite correct, was not the quite correct move that I wanted to see, they were still able to pull some money out of this market maneuver. So kudos and shout outs to all of you. All right, let's take a look at the 4 hour. Obviously, Bitcoin having a nice surge up here, a nice big Jericho candle off of the lows. What do we see here? A 4 hour doji. Price often does reverse on these nice little squat dojis with thin wicks. We've talked about this before. We did have on this candle a crossover in oversold territory, which is going to be kind of a classic, an old school reversal Minx buy signal right here. We had a nice continuation short signal from Minx right here on the 4 hour, which led to this decline. And then kind of that curling back up, again, on the 4 hour, certainly hitting almost all profit targets using Quadriga 1, 2, 3 on this particular system right here. What do we see here? So kind of coming up to range resistance right around the 94 to 94.60 territory right here. We can see this previous consolidation zone. This was the distribution zone before this sell-off right here. Closing and breaking back above this. I would like to see price at least come up to the $9,800 area. But of course, as I said, bottom feeder is kind of indicating for that 99.18. And we do now have the, accumulation zone right around the 9,100. So 4 hour breaks of those levels could indicate potential breakouts. But again, make sure that if you're a student that you've, kind of studied the BPC methodology, the horizontal support and resistance methodology for looking for those types of setups to add confluence to your swing positions. Nothing for me right now, just holding my longs, not looking for any entries based off of this data. Looking at the 45-minute time frame here on BTC, we've got the CME close that was demarked up here. 95.09 is where we ended up closing on the CMEs on Friday. Looking for a fill of that gap. That's going to be another couple $100 out of Bitcoin to the upside. You can see here. So looking for confluence from what the delta volume candles gave us. We came right back up, charged all the way back up to the point of control, which we often retest. I think it's like 70% of the time. After it, if we have a movement away from the point of control, we always come back and retest yesterday's point of control. Happens very, very frequently. Doesn't happen all the time, as I said, 70%, but happens enough to where these things are important. Now we are near the top of the range. We could see a pullback here. I'd like to see if we hold the $9,300 level, which would be previous support of the previous range that we've now traded back inside. We do see obvious acceptance right here. Not massive absorption of buy-side liquidity here, but obviously the level to kind of watch more closely is the break of 9,400. But of course, I am already long. And again, we have that nice confluence with the point of control as 9,100, which was indicated as that kind of range low. Watch that level to break. But overall, this kind of looks far more bullish than bearish to me. We can still see here BitMEX price in backwardation, indicating that retail really wants to sell this area, which they normally do at lows. I don't understand why. I just don't get it why that is the case when looking at this chart. But yeah, and this indicates that individuals still want to sell this level. So 9,300 potential pullback area, maybe even be a little bit more cheeky and look for the 92.78. But I would. It's not really the most attractive setup to me. Nice movement to the upside. Obviously buying pullbacks is in league. So that's fine. And we can see that we can see the growth of the BitMEX premium right here, the entire way to the upside, and we have not flipped positive. Predictive funding is now estimated to flip to the long side here, and of course, predicted funding was negative right here, which was kind of interesting to see. All right, so here's the CME. We've got a little bit more to go for the gap fill right here. So 95 would be the gap fill here. Or 94.65, excuse me. I thought it was 95.05. Perhaps I got that wrong. I had demarcated 95.05. Apparently it was 94.65. So still a little bit more ways to go. And overall, I'd like to see that 94.70, 95.30 get filled. And here we go. S&P 500 performing. I mean, this looks like the chart we just looked at. So here's what the SPY futures are doing, surging to the upside, and Bitcoin following right along with them as a little bit more risk on appetite comes into the market. Let's take a look at order flow. We do see sell side pressure coming in. Volume delta is negative, but overall we don't see a lot of big shorts positioning over the last hour or so. So this looks like a good profit taking area. More individuals longing this area than really should, buying into liquidity and filling limit shorts, but not a huge amount of sell side market pressure yet. So I think that pullback to the 9,300, maybe even a little bit lower here, is still kind of the play. This doesn't look like a buying opportunity right at this moment, looking for that breakout trade. Okay, and let's go take a look at let's go look at the Donchian system on the daily. All right, Donchian system on the daily is still not signifying for shorts. We can see that our volume indicator is still negative and actually creeping back up as money flows back into the Bitcoin ecosystem. But however, our momentum indicators are pointing down, indicating really nothing right here because they don't have confluence with our volume indicator. So no swing shorts on the table with this particular system, and we would need a little bit of an indicator reset, and we need to see price above 95.94. So let's just say 9,600. If we can get back above 9,600, we're going to be looking for that next swing long opportunity. As I said, we're kind of looking for that break up to about 11,000, 12,000. Ironically, because those are the next $1,000 intervals that come after 10,000, and really the $10,000 level is the one that we're all watching to break. So no big surprise there. I wanted to point out this declining volume, particularly the declining sell side volume coming in to the markets, as we can see here. And now a pretty decent buying volume candle actually on this candle right here. So good volume so far on today's movement. And again, this is fairly simple to plot. We can just plot the diminishing sell side pressure as we continue to move up, and we would like to see kind of a surge of that to indicate that we're going to have further downside, which we haven't seen. So okay, that's about that. So let's go on to our major, well, let's look at the broader crypto market, of course. Give ourselves a nice refresh here. See how things are trading against the dollar. Sia coin up more, was only at 4% earlier this morning, surging about 10% with just in the last hour or two. Verge, QNT up, NRG up now, Sele, Ren doing well. So QNT, Verge, and Ren rumored to be listed on Coinbase. So that makes sense. They've continued their pump. Zilliqua must have sold off because Zilliqua was up quite a bit, but now down. That's totally fine. And Swissborg has been performing decently lately. All right, let's look at our other markets right here. Ethereum USD still not signifying for shorts yet. Again, kind of same diminishing sell pressure moving in. We will, of all the assets though, kind of Ethereum is the one that I'd be watching for continuation here. However, so far this does look like a pullback, but no longs until we're back above 230.75 on Ethereum. EOS USD similar, kind of consolidating and attempting to sell down through the bottom of the range, but no confirmation yet. No longs until we're back above 265. So kind of just flat on EOS right now. XRP, of all of them, again, nice drop on XRP. Again, right back to the bottom of this range that we've kind of been buying back up off for quite a while. So overall, this does still look like, to me anyways, still kind of look like a range here on XRP USD, especially because I don't have sell side confirmation for XRP here. So I don't really see the impetus here that is going to continue to lead to a massive downtrend. This does seem more like consolidation and continued consolidation for me. So I think that everybody jumping the gun and thinking that the range is breaking to the downside, I don't see that evidence yet. This does kind of look like a retest of our current demand level. And we can see that with the absorption of sell side flow so far in the form of these wicks. Now, this could still continue to break if the buyers here do give up and the whales really want to push price to the downside. So watch closely. We're at kind of an important level. But overall, I think it is more likely that we do actually bid up off of these levels than sell down past through them. We'll see. We'll see. That's the majors for me. That's the majors for me. Let's take a look. Kind of interesting pairs over the weekend. CTSI, which Alex had kind of pointed out to me. CTSI had been performing well basically for the last 4-day period, and nice pullback on CTSI, basically back down to the Donchian baseline. Not enough data here. The 4-hour does not look like an attractive area for me to buy, but potentially we could watch this above 425 sats. And I know this is one's fairly popular, getting shilled over there on Twitter. So be careful. In fact, we had been looking at this one for a potential trade, and we talked about the break of about 450. But again, that was just kind of a lure in. It was just kind of a lure in here. Reserve rights, which, by the way, I'll be having an interview with some of the reserve staff, one of the reserve staff coming out later this week, potentially. RSR, pretty popular, getting shilled over there on Twitter pretty hard. Not looking fantastic to me, honestly. We can go to the daily here and check out RSR. I know this is kind of a Huobi darling. Pull back to the Donchian baseline and cross up. So again, this is still valid for daily swing longs, to be quite honest with you. However, on the 4-hour, we would need to see TSI cross back up above the signal line here. So maybe we can see here that we are crossing above the 26 period Donchian. So instead of just a close above, I would like to see an open and close above, see if we can get a little bit more momentum coming out of RSR, moving into kind of shitcoin paradise here. Let's see what else was on. Obviously, we've got REN performing decently today, continuing to break out. I don't see an entry here on REN. The continuation entry, we did have some hidden bullish divergence right here and some decent buy side volume come in. Money flow remained positive throughout this whole level. So we do have an initial signal on this candle right here, which led to this sell right here, and then potential re-entry right now. So while I don't recommend REN for a re-entry right now, it is still valid to hold open for the longs that did nail it, at least on the 4-hour, and of course on the daily. Far too overextended. Here's the here's the entry signal right here on Saturday. Saturday was a good entry for REN BTC. That did confirm everything. We can see the crossovers. Everything is good there, and leading forward to about a 10% surge today. So good stuff. And the last swing that the system would have caught with REN, we can just take a look here. Here's the original initial entry candle and sell candle right there. So pretty good, and looking to catch this next swing on REN 2 right here. So everything does seem pretty dandy in REN land. But no, I mean, you would be, I think, incorrect for entry right now into REN. You're just too overextended. What else do we have performing well today? Verge and Siacoin, very, very low sats, so a little difficult to chart, but we'll take a gander. Let's see here. Yeah, Siacoin doing fairly well, trading at 39 sats. Riskier to entry, particularly with swing systems. But we can see here DMF's been very positive since right around here. So any entry around these areas would have been decent. Let's take a gander here. Entry here probably led to a good take profit there, because I think the take profits are about 2 to 3 sats away. So would have scored some profit there. Pull back down to break even here. Here is another re-entry on this candle right before a nice move to the upside. So a secondary take profit there, back down, stopped out of break even after 50% profit. Good. And let's see here. Yeah, re-entry here. We actually would have held. We never closed below. So yeah, we would have entered here, sat for a while, and then caught all this. Yeah, so we would still be long on Siacoin BTC. Siacoin BTC still continuing to look good. Suicidal for an entry right now. But positions can be held. We're quite a bit of ways away from a profit-taking area. But I will point this out. 1, 2, 3. Triple bearish divergence with high volume on SCBTC. This is a good profit-taking area, actually, maybe around 40 sats for SCBTC. At least half. Let the rest of the position ride. We are coming back up into this previous distribution area right here, which is going to act as resistance. So I never like to get out of altcoins so quickly that I don't let them run. But this is, you can see the explosion of volume here and the triple bearish divergence and time transformation. Seems like a good profit-taking area for me, particularly. And Verge. I know that Alex has us long on Verge, actually. This is a trade the group is actually in. Let's see here. Where was the re-entry? Right here. Re-entry right here for my system. And profit here. So I would not, me personally, I wouldn't be in this if I was running the Donchian on alts right now, but we're not running the Donchian alts. We're running the BB system. About a 58% swing to the upside on Verge right there. So good entry. Good on you alt traders over there. And kind of zooming out here a little bit. I think we still got some room to go on Verge. Maybe 115 sats we could be looking for. So another good appreciation. Maybe another 20 to 25% still left in the Verge train here. And maybe even more. Maybe even 190 sats if we really get up in there to the previous distribution area. 170 to 190. GBU Professor Wally, man, thank you so much for the $10 super chat. Shout out to you and Gunbot University. He says, would you add Kyber Network and NEO to your analysis today? Let's get it, man. Kyber Network, they of the Shilly going to be added to Bitcoinness. All right. So Kyber Network is not in play for me right now. It's still bullish, pulling back 3 days of dojis, indicating kind of overall equality in the markets right now. Sell side and buy side pressure seems to be equal. Bulls are still holding us up at a higher price. Sellers are still attempting to take profits here. We can see that indicated by the fact that we did go overbought on time transformation and put in the reversal signal, the sell side signal right here on the 13th on Saturday. For my system, we did see initial entry here on the 5th would be the last trade for this run up on KNC. At a 60% swing on KNC right there. And I would be out on KNC right now. I'm going to need, we can see here that we are no longer overbought. So I would be looking for a crossover here on time transformation. Everything else looks relatively bullish and good. Level to hold for KNC is 10,463 sats, excuse me. Getting down below that, we start to enter into bearish territory and trend. So maybe any pullbacks. Pullbacks between 11,553 and 10,463 would be adequate for buying back up. KNC right here, this green box territory right here would be adequate pullback zones for KNC, and most likely be managing risk. Let's measure from the median right there. What is the ATR? So just pull up Quadriga. 9.73%. Yeah, manage risk around 9.73. Manage risk around 9,700 sats. What I'd do. Look for this area and look to manage risk below 9,700 initially. Now let's zoom out on Mr. KNC. Yeah, if we manage risk there, we look for re-entry here. And the next place we'd look to take it is about 17,800 sats. But really here and then here. There we go. Something like this. Yeah, something like this rough construction, but I mean, in reality, I'd use Quadriga, and we can see that we're kind of pointing for the same levels. But that's based on current price. So actually with an entry down around here on that pullback, we'd be closer. And again, I'd also be looking for that objective entry signal. So I'd like to see price come down and then give that crossover. I would use half a risk if it didn't cross over. If it didn't come down, I would use half a risk if we were still above the qualifying line to take that trade to the upside. But still relatively bullish on altcoins. I don't really see any reason for things to change. And then we'll look at NEO. S180XT says, Justin, can you explain why I rubbished trend lines and fib levels at the start of the stream when obviously you can see on charts that price does respect them and so many traders and bots use them? Well, a couple things there. So good question, man. But obviously I can't see them. I don't see that being obvious. I don't see them. I don't see them being respected. What I do see is individuals draw them after the fact, and it's very convenient to draw a line after the fact and say, "Well, look, it hit." The other problem with Fibonacci is there's a bunch of levels, right? There's the golden pocket, right? 61.8, 78.6, 88.9. You know. So, you know, which fib level is it, right? And it always changes from analyst to analyst, and it seems even intra-analyst from trade to trade, right? So there's no hard, fast rule. There's no really good. Listen, there are individuals out there who have a more objective than not Fibonacci trading system, and I certainly don't want to come off like if you use Fibonacci, you're terrible. I just have a pretty hard stance against subjective trading of that style because I've been mentoring traders for years now. And I've been trading for years now, and everybody that comes to me with a Fibonacci strategy, almost always does not make money in the long run, right? If you project their profit curve out, and if I check in on them after like several months, they make mistakes. The reason why generally is because that is a subjective style of trading. They don't take into account general trend and market dynamics when they do that. They tend to get pigeonholed into thinking that this is going to work all the time, and so they don't look at the real trend of the market. And again, like, where do you measure the Fibonacci from, right? Do you always measure it from the high to the swing low to the swing low to the swing high, close to open? And I know that when I say that, everybody rushes out with an answer, but the problem here is, man, everybody has a different answer. So it's an extremely subjective method of trading that works very well in hindsight. It's the best hindsight indicator of all time, because if you post an indicator with 10 lines and you don't really indicate which one of them is going to hit, or you just, draw a fib retracement and you say, well, if it goes to this level, then we might do this. If it goes to this level, we might do that. And then 2 days later, it goes to one of those levels, conveniently, and then you say, ha, I told you so. I hate that. I hate that type of trading. I've seen that for years in my career on Twitter, and seen traders and novices and even experienced traders kind of lured into that, thinking that this analyst has some knowledge that they don't about how to use the Fibonacci. If you can utilize the Fibonacci retracement or trend lines or all that stuff to actually, here's the thing. Drawing a convincing chart is easy, right? Anybody can do that. Just like my 2-year-old daughter can draw a pretty good stick figure. But taking that knowledge and converting that into making consistently profitable trades is completely different, right? So regardless of the fact that these levels are respected, my question would be, okay, projecting that knowledge into your trading, does this actually make money or outpace the market or cover the drawdown on the times when you're wrong? Because it's certainly not right all the time. So when is it right, and what market conditions can it be utilized? I think that more advanced discretionary traders might be able to find a place for it in their strategy as a tool. But in my experience, it is absolutely the worst place for traders to start. I think that it is an underperforming indicator. I think that style of discretionary trading in general underperforms the market. And I think that it is also, it contributes to a style of trading and a philosophy of trading that is very discretionary, and unfortunately leads to too much emotional and ego involvement in the markets and in the charts, and too much screen time, honestly, right? The way that I trade is very passive, very laid back. I trade long swings. I look for long swings in the market. I look to be a very passive trader, honestly. And I mostly focus on managing my risk and educating other individuals. So I don't find that style of trading is conducive to me being profitable, and I certainly don't find it being conducive to just about everybody that I've taught being profitable. I think it's probably one of the biggest distractions and false flags in the market that people get bogged down into. And again, it all comes down to, I do not see it make me or other people money, right? I see it being convincing, and I see those levels being respected from time to time, certainly. But I don't actually see that translate into dollars in my pocket or dollars in other people's pocket at the end of the day. What I do see it translated into is people like, is people on Twitter posting very pretty charts, and that translating into people putting money in their pocket for whatever they're trying to sell. So, I know that that's not true for everybody. There are individuals out there that make money or claim to make money with those tools, and full respect to them, because again, the failure rate on trading is only like 90 to 95% for discretionary traders. So that means that 5 to 10% of traders are making money discretionarily, but most of them are not. But that is a good question, man. Yeah, and I just want to make, again, that's not directed with any hostility at you whatsoever. Huge shout outs to you if you're utilizing that or making money, or if it was just an honest question. But I just, I make my opinions about things pretty clear, why I do things the way that I do, and why I've come to my decisions. Neo, Wally, man, you're in trouble, dude. This chart is starting to kind of look like a dumpster fire, man. And I like Neo, but we are getting sold down into pretty hard. We're just now entering into, well, now not just now, but we have been in negative volume territory for about 4 or 5 days. Alex says, hey, by the way, we're short Neo Bitcoin. Good man, because this does certainly look like a chart I would like to be short on. Excuse me, by the way. We are getting our first green dot of life here on the daily. But we are trending to the downside, so this trend could last for quite a while. If I just wanted to pull open a level that looked like logical support off the top of my head, it would be about 10,500 sats? No, I think that's 105,000 sats. 105,100 sats. Yeah, right around there. We are kind of seeing that same buy side absorption, but the difference here with Neo is that we are actually in a downtrend. I believe the last time I was asked to look at Neo, I demarcated 118,000 on the chart, and we certainly did break down below that. And on this candle qualified for shorts. So we had 2 days of consolidation, and now nice 2 days of good profits for short position. So this was a good short. Good catch, Alex, because this certainly is, this lines up all the dots, crosses all the dots, all the I's, crosses, dashes all the T's here. Yeah, this isn't in play for me, man. Trend perspective, I need to see this back above almost 120,000 sats. Yeah. Which means, we need to rally upwards about 9% on Neo BTC. And Neo just does not look good. If we're looking for accumulation areas, as I said, watch out for that 105,000 sat area. But I'd like to see how price reacts, right? I'd like to see how price reacts. Getting down below that, we've got the 90,000 area. Yeah. But let's watch. Let's see if we can rally here, and if we can kind of consolidate in between this re-entry zone. I would like to re-short from here if we do rally back up here. But I'd be watching for those breaks to the upside and see if we can get positive money flowing. We might actually see a little bit of a bounce here with this green dot of life. But again, that only occurs... I don't have the pure stats on Neo BTC, but for the majority of majors, that the bounce on the first green dot of life only happens about 17% of the time. So it's a possibility, but less likely than continued downtrend. So I'm not liking Neo here. Neo's not a play for me. I much preferred your other one, your KNC. Dumpster fires are my favorite investments. I can sell tickets and get on the news with a good dumpster fire. All right. Let's branch off of cryptocurrency for a little bit. Let's go look at our indices here. I want to look at the DIA. Let's see here. The DIA was not in play for the short. True Strength Index would have kept us out of this. And now we're having this nice research back up to the baseline. If money flow turns negative here, this will be a confirmation of a reversal baseline bounce. If we do reject the DIA from 257.85, which is where the baseline is, everything is kind of negative now. So it feels like I'm going to be risk averse. I'm out of the markets. As I said, I exited, traditional equity markets for, like I talked about this all last week. So I'm definitely going to wait here because this was great sell side pressure coming in on Thursday. So we are getting kind of a bounce back up to the Donchian on the Dow, and overall positive day for the markets. I don't necessarily feel it by the dip, although the sentiment certainly is bullish, but my gut tells me to stay out of markets for right now. So I'm going to do that. When it comes to, how to trade, I follow my system, but when it comes to like what markets to trade, I certainly pay attention to my fundamentals, and I still don't really want anything to do with equities right now. In any way, shape, or form, right? So we'll keep an eye on it though, because that's obviously going to be a big trade coming up. Same for the NASDAQ. We are crossing actually back above, but now things are now unqualified. I'd like to see how that 237, 280, 238 level holds now, because that was the resistance to break. That was the previous high, and now prices bounced back up. Let's see if we actually fill that gap. And on the SPY, very similar to the Dow, right? Everything just turned negative on the Dow and the NASDAQ and the SPY finally. And now we're getting this kind of nice surge back to the upside. The SPY hasn't given us the negative money flow yet. The NASDAQ and the Dow did for a day, but bounced back up on today's buyback. So I would say if we get another significant sell-off, then I'll be short. Then I'll be SDS'd up. And just for reference sake, let's go look actually at, let's go look at SH. When we consider shorting the market here. Here's SH. Here's SH, and we almost got the confirmation to long here. We almost got the confirmation to long SH, right? We gapped up, opened up, and then down here on SH. So I would say another positive close or two here, and the actual inverse ETF chart is going to actually confirm here. We do see VIX was the play. I talked about the VIX play down here, and VIX ended up being the play, as VIX has obviously popped up on these market fears. So that's about it for indices. Let's look at our precious metals here. Gold's still not doing much, still not confirming longs or shorts, just putting in the same consolidation in the resistance zone, obviously rejecting from resistance for the third time, but consolidating above the Donchian, right, with decreased sell side pressure on today's candle. So I'm liking gold to the upside here, but certainly just kind of zooming out, it does seem a little topped for the moment, but this consolidation near resistance is good. So as always, I'll just kind of wait for the market to give me a good indication here. Palladium still holding on to. We're still consolidating in this kind of this death knell right here. So really no. And TSI still hasn't crossed under. Time transformations just chilling, and we still have positive money flow. So nothing really to update here on Palladium. Silver is kind of looking like a buy here. I'm not going to lie. Nice reversal baseline bounce. I'd like to take silver back up to about like 1750, 1780 for a little swing here. So maybe a 2% swing on silver, but still not confirming any massive buys. We can see here that TSI just recently crossed under. So it's gonna take a little bit of time for us to revisit that bullish momentum. Overall, my system got me out of my last silver swing over here around 17. Actually, it was like 1711, which was good because we had a couple valleys here, but overall price really honestly hasn't moved much in a big way for silver since then. Platinum continuing to list to the downside. Look at all this distribution. Look at all these wicks. This concerns me, but platinum is still not a short, still hanging in there, doing that same kind of consolidation as palladium and the rest of the precious metals. So nothing yet. Again, after a pretty big sell-off on oil too, we bounced right up off the baseline. Price pushing to the upside here. No confirmation for long swings out of Mr. Bentley crude oil here, but one to watch. And that's about it. That's kind of the only thing I really have my eye on, except for corn, which I've been playing lately. Yeah, that's about all I got. Give you guys an update on the Aussie Kiwi. Still short on the Aussie Kiwi. Nice rally off of the lows on the Aussie Kiwi. Big sell side pressure right here. We are kind of in oversold territory here. Green dot of life on time transformation. So if we kind of get a buyback off of this range and it continue to follow through on this buy side, I'm probably going to go ahead and close the Aussie Kiwi out in good profits. My entry was right here. So good, nice short swing on the Aussie Kiwi. Palladium, as I said, decided to keep this one open. Nice resurgence today. I'd like to close back up at above break even, and then I'll probably let the ETF Palladium go and hold the CFD open. This is not a play anymore. I don't have that trade open. So actually, I have very little risk on. Long on Bitcoin, short on the Aussie Kiwi, and then I got a Palladium long open up CFD and ETF exposure. So let's take a gander at my watch list. Actually, let's take a look at the economic calendar and see what we have coming in today. I knew it was a UK heavy day, and the Bank of Japan rate decision coming in a little bit later today. Let's see here. Tomorrow, big Eurozone day and UK day. What do we got? We got CPI from Germany. Hullabaloo. Although that might matter because Germany's export market just kind of collapsed. So unemployment from the UK. Maybe avoid pound trades. This is nothing really. Yeah, a lot of retail data coming in tomorrow from the Forex markets, but I think, honestly, and it's kind of interesting as somebody who does follow the economic calendar to avoid risk, but in reality, I've actually seen those things have not been moving the market as they typically do. It's all COVID news. It's all COVID news. Punisher BX1, thanks so much for the sub on YouTube, my friend. All right, let's get into all right. Everything's looking pretty good. We're going to get into today's news. I've got some news nuggets to cover, and then the main story, of course, Vitalik Buterin and his thoughts on PlanB's stock to flow model. If you guys are enjoying the show, make sure to subscribe. Hit the thumbs up button. Highly appreciate it. Let's see if we can get to 50 before we get to the end of the news. As you guys know, personal mission in life. If you guys are tired of getting wicked out on BitMEX, I recommend you check out an alternative. The better alternative is Bybit. Pretty big fan of Deribit and FTX and Femex as well. All better alternatives. Again, the exchange that I'm trading on that I'm really preferring right now is Bybit. The BTC USDT pair is where I've been doing most of my plays lately. I really like the fact that I can open longs and shorts simultaneously on the same contract on the same page without going somebody else, and hold my equity in USDT. So if you're beginning to trade, if you're a beginner trader, I really think that's one of the better ways. If you are just approaching from a dollar perspective, like you're just here to grow your USD equity curve. If your idea is to stack sats, then Bybit's BTC USD inverse perpetual contract is going to function very similarly to BitMEX's. The only difference is less wicks and you don't get scammed out all the time. So let's go check in with our friend Jason, then we'll get into today's crypto currently segment. Let's go. Can't catch a break over on BitMEX with all the wicks? Try a better alternative at bybit.crackingcryptocurrency.com and rest easy for a change. All right, and we're back. All right, so our first story of the day Ousted Bitmain co-founder Halts Antminer shipments. Now, we actually covered this last week. I think I was like way early with this news, talking about the developments over there between McCree, who has taken somewhat legal control back over Bitmain from Jihan Wu, and the company of Bitmain seems to have forked. And I talked about how the Antminer shipments were not hitting the markets anymore after McCree has basically said, hey, we're not shipping Antminers out anymore until he can wrestle more control over the company, and how this is A, terrible for Bitcoin Cash, B, probably not good for Bitcoin mining, and C, probably super not good for Bitcoin mining in the fact that we are looking at the largest difficulty adjustment upwards in recent history. So this is just this is coming from BN Crypto. I think they're a little late to the story on this one anymore, but because we covered all of this and more. Jawad, thanks for the sub on YouTube. We covered all this and more last week, but just I'll drop this link in the description down below if you guys wanted to check this out. Here is CEO of BitRiver, Igor Runets, who runs the largest mining colocation site in Russia. Clients are switching to hardware from rival firm MicroBT. He says, we have many clients who are waiting for Antminer S19 devices. Customers were not satisfied with the long wait time, and this, I believe, was partially caused by internal issues. We really hope the situation will get back to normal by September and won't affect production time. Otherwise, there will be a massive erosion of trust in the company. I think that they're going to see that massive erosion of trust. So Bitmain on the ropes, not looking good. The purge on YouTube continues. And listen, here's the thing, right? Even though you guys know how I feel, Bitcoin Cash, Bitcoin Core, right? I am not a fan of censorship. I am not a fan of praising the tool of oppression, of praising a tool of tyranny when it is used against my enemies, like a lot of individuals will, right? So because that is praising the totalitarian tool when it's working in your favor against your enemies, that when the pendulum of power shifts, will come back and smack you in the face, right? Because the club or the boot of totalitarians feels the same on your neck, whether you're a winner or a loser. So I am not going to praise, even though it's funny, I am not going to praise YouTube for censoring Bitcoin.com's official channel, even though I might believe that Bitcoin.com does not produce beneficial material for the cryptocurrency space or for Bitcoin in general, as the kind of the harbinger of a very contentious hard fork, right? So I'm not going to do that, right? I'm going to call this out for what it is. So before I call this out, let's get to what actually happened. So Roger Vere's Bitcoin.com YouTube channel gets banned as the purge continues. YouTube is continuing its ban of cryptocurrency-related channels. The latest victim is Roger Vere's Bitcoin.com channel. Direct quote from Mr. Roger Ver himself, where he double uses the term official, not necessary in my opinion, but he says, quote, YouTube has banned the official Bitcoin.com YouTube official channel for basically no reason. I suspect probably a bunch of these Bitcoin Core anti-competition maxis falsely reported the video saying it's a Bcash scam or some nonsense like that. Very logical, but not really. I mean, I get this. Maybe that is what happened, but what I mean, Bitcoin.com's had a YouTube channel and produced a lot of content recently too. So why would now all of a sudden this marauding band of Bitcoin Core maximalists like decide to ban your channel? Or false flag your channel? Doesn't seem to make a whole lot of sense to me, particularly when we already know that this has been a thread that has affected content creators on both sides of the aisle, right? Whether they're Bitcoin maximalists or shitcoin maximalists, or, you know, calling for multi-coinalism, right? So a little play on multiculturalism there. So it's it seems far more likely that Roger Ver his Bitcoin.com channel just got caught up in the YouTube purge. Of course, if we ever get taken down, you guys can continue to catch us on DLive, Twitch. We're also working on our website solution right now and bringing our podcast back, so you guys can always so you guys hopefully in the future will just be able to go to the direct site and catch the show live there. But yeah, I don't feel that this is likely that. I feel that this is, as I said, just likely Bitcoin.com getting caught up in the purge. And so again, I'm going to call this out for what it is, what seems to be censorship or an overactive algorithm. Obviously, there has been this plague of, which this article goes on to talk about, there's been this plague of, scam, very popular. I don't want to say popular, right? They pay for views, they pay for likes, they bought their way to the top of the live channels, and they're just there to explicitly scam you out of cryptocurrency, right? So if you don't know, if you're new to crypto for some reason and you're watching this channel, listen, and we're going to cover this a little bit in the next story. Unfortunately, the world of cryptocurrency is full of scammers, right? There are a lot of amazing, good, honest, hardworking people here. I have met some of my best friends, some of the most amazing, gifted, talented individuals I have ever met in my entire life in the realm of cryptocurrency. This attracts the smartest people, but it also, as all nascent and new frontiers do, attract the scum. And anybody, I mean, it's just safe to assume anything out there that is promising you something for nothing is not worth your time, or at worst is a dangerous scam that can take your money, right? Nothing in life is free. There is no such thing as a free lunch. You always pay for something eventually down the road, right? It takes a profit incentive. This is the free market. It takes a profit incentive to offer a product or service to the market. You cannot and will not produce for free. So nobody is going to send you 2 Ethereum if you send them Ethereum back. Nobody is going to send you 10 Ethereum if you send them Ethereum. It is all a scam. It is always a scam. It always has been a scam. Anything or site or person or company or service or Discord bot or Telegram bot or Twitter bot that professes to send you more crypto for then what you sent them. Anybody who says their funds are locked up and need help getting them out. Anybody that says, hey, let me see your private key real quick. I got to run it through this algorithm and make sure it's all a scam. Don't do it. Keep your crypto safe, not your keys, not your coins. And that means your keys need to be your keys. Nobody gets your keys. Nobody gets your coins. So just be careful out there, guys. And yes, unfortunately, there's this massive plague on YouTube right now. I'm not sure. I don't know whether this is some kind of targeted campaign against cryptocurrency in general. I feel that it is an overreaction from the algorithm to attempt to shut these things down. And there's a lack of funding and staffing right now due to COVID-19, which many conspiracy theorists are going to say, well, that's very convenient, Justin, that it just so happens that they took this opportunity to just go ahead and snipe all the crypto content creators off due to COVID-19. Yes, it is convenient, but it's also rational. So jury's out on this one, but I think it seems just more like, hey, crypto content creators are currently getting the short end of the stick. It happens. It's happened to all different kinds of fields and industries over time. YouTube's not a perfect platform. And while I do advocate for decentralized alternatives, which is why you guys can find us on DLive, for example, and always will be able to, I think it's most likely it's less of a tinfoil hat situation than just sucks to be us right now. All right, so let's try to take this with a grain of salt. All right, nothing major here, but the United States Treasury considering using digital ledger technology to ease delivery of stimulus checks. We've talked about this for quite a while. Nothing really conclusive here right now. But as I said, just kind of weaving the larger economic thread together, everything that we're currently seeing in the United States and around the world is late stage empire behavior. Study your history. This always happens. Debasement of the currency leads to these late stage empire things, these late stage sovereign behaviors. One of them is direct stimulus to the body populace, to the people. This has already happened in the United States, obviously has happened in Europe before. With negative interest rates, we are on zero interest rate policy in the United States, and Jerome Powell has come out and signaled that we will be on ZIRP until 2022, most likely, at least, and there's really not anything that could possibly happen that will make them raise interest rates, even if unemployment skyrockets, even if the market recovers, even if like we just come up with a vaccine tomorrow. So we are going to stay in ZIRP, and that is very, very bad for the purchasing power of your dollars. This is why we're seeing a flood into Bitcoin, seeing a flood into gold, seeing a flood into silver, or why smart money is moving their money there, which you should be following if you want to follow smart money into the correct investments or hedges against inflation. Doesn't mean that there's not investments to be made or money to be made or opportunities out there. Quality stocks are quality stocks. Quality companies are quality companies. But having said that, as I said earlier, we are not going to see stimulus go away. This is what late stage empires are forced to do when they realize that the debasement of the currency is hitting those who they profess to want to help the most, which is the lowest segment of population, the lower class, the lower middle class. The money will not reach them because the money is not being disseminated or distributed equally or even rationally throughout the economy. It is being put into the asset class by commercial banks who get the benefit of the money that the Fed prints in the first place. So when the civil unrest and when the malaise of the people of the nation reaches a boiling point, the governments are always forced, the sovereign is always forced to give some form of stimulus, some form of concession to the people so that they do not riot and kill the king. And that's what we're seeing right now. So these stimulus checks are not going to end. They're going to continue. They're going to be used to justify some form of universal basic income, which very similar to many individuals who've talked on this, like, I can see a future for universal basic income where like 50% of the workforce is unemployed due to, robots and digitization and automation. But I do not think that universal basic income makes sense right now. I don't think there's a good case for it. I think the economics on this are pretty clear. But again, economics is one of the easiest kind of mathematics to skew and wrap around a cloak of philosophical smarmy-marmy. So, but what's going on right now, UBI is not good, in my opinion, for the United States. I don't think it's a model that's going to actually help. And because maybe if it was some, and I'm against redistribution of funds in the first place, but if the money was somehow circulating more efficiently within the monetary system, which again is an economic model that I'm against, I would be more okay with it. But since this UBI is being created out of debt, right? Since it is freshly printed money, then that is even worse, right? Now, granted, they do somewhat get the benefit of the freshly printed money right away, but not necessarily, because even with that freshly printed money, the distributions via UBI are going to happen after the fact. Then commercial banks still get their portion and push them into the asset classes. So while this will help them outpace inflation immediately, it will still, over time, continually diminish the purchasing power of the dollars that are given out, requiring the need for a larger stimulus, requiring the need for larger UBI checks, which is just this really, really dangerous positive feedback loop. So yeah, and we could go into more detail on that, but again, that's my personal take on it. Commander Gore says corporations get UBI. LOL. Why not the people? I don't think corporations should get UBI. I don't think that the government should be printing money, and it's all going to come to a head. And giving UBI to the people is going to make it come to a head faster, right? The problem here is not giving money to people, right? As I said, if the money was being circulated somehow and given to the people, which I think people certainly do need more money, that would be one thing, but it's not. It's being created out of debt, which debases the currency and reduces the purchasing power of the dollar. So in a very real sense, the government is not going to be able to achieve what they want to do because they are creating this positive feedback loop where they're giving money, but the purchasing power of that money decreases every single time they give it, requiring them to print more money, leading us to further debt, which is a tax on future generations yet to be born. And it comes to a head. The people will riot, right? The people will not live under tyranny for very long, right? Everybody talks about these crazy dystopian futures, right? Where it's just total boot on the neck. And certainly that is an absolute fear. However, studying history, we do see that nations and empires fall apart after 30 or 40 years or 100 years. So I think that the same would be true of a dystopian future as well. But certainly don't want to run that experiment and live under 100 years of totalitarian control and rule to figure that out, to see my hypothesis be proven right or wrong there. All right, very interesting data from Skew and Genesis Vol. Been following them closely a little bit lately. So I think that this market move actually pushed Skew negative again. Skew had been positive, but we've got 100,000 Bitcoin options to expire on June 26th, which is pretty huge, as President Trump would say. We can see here just a beautiful amount of volume. Previously, it was 84,000 Bitcoin. Now it's over 101. This says that the amount of Bitcoin put options is rising. I think that the overall put to call ratio is like 66% to the call side. So certainly more calls. I think there's 66,000 to 44,000 calls to puts. The last time that I checked, the Genesis Vol data this morning, actually, they sent out the newsletter. But it is possible that puts have been rising more in the last few days, which makes sense, right? As prices is going down a little bit. With the strike prices, so as I said, strike price of 11,000 still dominant to the call side. So So this means that the overall market is still quite bullish and positioned to the long side. A lot of individuals are going to lose money if price does not rally to above 11,000 by June 26th. So keep watch. There is a lot of incentive for whales to make pushes here moving forward. Number of Bitcoin wallets with at least 0.1 BTC has made a new all-time high. Another quite bullish indicator, in my opinion. All right, getting back into that kind of like crypto scammy thing right here, right? I read about all this on Twitter over the weekend. I actually read this Twitter thread and saw it come up in my feed. So, so Eric Savix, who is a kind of a cryptocurrency influencer, whatever the heck that means, he runs this thing called Protocol Podcast, and he published a pretty long tweet on Friday saying that he had a savings of about 12 Bitcoin, and it all got stolen from him from a phishing attack, kind of a hardware wallet phishing attack. And he just said, hey, if the hacker could be so kind, like, please give me my Bitcoins back. And people started sending him donations. He said he wanted to purchase an apartment with that Bitcoin he had been saving since 2013. And he asked for help to potentially track down the stolen funds. So that wallet has accumulated more than 0.77 BTC at the time of writing. I don't really see anything wrong with this. If people, whether, who knows whether the dude's telling the truth or not. He's not like this nobody. He seems to have a pretty good, a stack of credentials in the cryptocurrency community. So I'm not going to speculate as to whether he's telling the truth or not. Seems kind of on the up and up. Generally, I'm very, very wary of these things, but I'm just going to kind of point this out here. But 0.77 BTC, let's put it this way, right? It's kind of like a cost benefit analysis, right? So again, this guy has a reputation, runs a podcast that seems to be relatively popular, and has a bit of a following in cryptocurrency. If he's going to cash out all of that for $8,000, so, but if he's legitimate, then this is a pretty heartwarming tale of the kind of community coming together and helping out one of their favorite content creators, which is good, right? Content create, like, certainly I know from running the show, content create, and from having relationships with other content creators, it's not cheap, it's not free, it consumes my life, it consumes the staff's life. There's a lot of hours, a lot of manpower going into the show, into the content, into everything that we do. So, yeah, that's about it. I just wanted to mention that. If you guys have any thoughts or more information, comment section down below, please. If you guys thought Trollbox on BitMEX was bad, CoinMarketCap is going to be adding their own Trollbox on CoinMarketCap. So CoinMarketCap launches chat feature to bring global crypto community together. Let me tell you, if I know anything from kind of anonymous chat platforms, they do not bring people together, right? They do not bring people together. DMs bring people together. So this is kind of funny, and I think this might be pretty popular. This is going to be, I can just already tell, because noobs go to CoinMarketCap. Like that's one of the most popular websites, regardless of who you are, but particularly a place where novices will start as well. And if they get shuffled into that chat, they're not going to, but they should hire a huge moderation staff, because there is going to be scamming galore going on in that troll box. Like it will be, I have no words. The troll box on coinmarketcap.com is going to be overrun, right? Just get the African, dancing funeral meme ready to go. We're going to need to get memes going back strong. What I will say is this, look for positions to be posted in the CoinMarketCap troll box. I think that would be a cool feature, right? So we could get even more like bad information, because everybody knows that the BitMEX long short troll box positions are so reputable, right? All right, we already talked about this. All right, so let's get into today's main story, right? Which of course is going to be Mr. Vitalik Buterin, founder of the leading smart contract blockchain, that is, of course, Ethereum, recently voiced his strong disapproval of the now infamous stock-to-flow model, which has attracted a lot of interest in the crypto space, seeing as it paints a very, very bullish future for Bitcoin, particularly following the last halving event. So let's quickly review the now infamous stock to flow model for Bitcoin, which was created in its current implementation by the anonymous quant analyst PlanB, and how it attempts to factor in Bitcoin's scarcity and production rate by miners after halving events in order to predict the asset's price, right? So the stock to flow model extrapolates deep into the future, right? And it points to Bitcoin having a good chance at hitting $1 million per coin someday. So naturally, any predictions that put Bitcoin at 6 or 7 figures someday is sure to capture the imagination of investors everywhere. Now, in PlanB's, I guess we'll get to that here in just a second, right? In PlanB's latest iteration of his stock to flow model, which was published back on April 27th, he has removed time as a variable. And instead, he is now leaning on data collected from other assets, including gold and silver. And it is now forecasting a $288,000 Bitcoin by 2024. Or to put it another way, the stock to flow model is suggesting a rally in Bitcoin's price after every halving because of the supply shock in the Bitcoin marketplace. Now, the halving, of course, comes around every 4 years, and it cuts the mining reward in half for each block mined. This effectively reduces the number of new Bitcoin produced each day in half. Now, PlanB maintains that the model has closely tracked Bitcoin's performance over the years, and it also shows that Bitcoin's price has historically skyrocketed in the months following each halving event. I don't know if you guys are aware, but we are in the months following Bitcoin's latest halving event. However, Ethereum's Vitalik Buterin has not been sold on this model, and in a tweet he posted yesterday, Buterin explained why it is difficult to prove or disprove the validity of the stock to flow model. But we'll go to Vitalik's tweet right here, where he tweets that the halvings cause BTC price rises theory is unfalsifiable, meaning cannot be proven wrong. Was the peak before the halving, then it rose in anticipation of the halving, during, because of the halving, after, because of the halving. The last $20,000 peak was near the halfway point between the 2016 and 2020 halvings, right? So he argues that the timing of Bitcoin price peaks makes this theory unfalsifiable. Right. And again, case in point, Bitcoin posted its current all-time high of almost $20,000 at a halfway point between the 2016 halving and the 2020 halving. Buterin went on to further clarify why he disagrees with PlanB's stock to flow model, but he did acknowledge the fact that Bitcoin's price upswings not being coherently correlated to the block halvings is not enough to discredit the stock to flow model outright. So basically saying that, listen, even though what I'm saying is correct, this does not discredit what I am attempting to discredit with my original point. Really like the logic bombs here. So PlanB, of course, took to Twitter to fire back at Buterin's critique of the stock to flow model. Specifically, PlanB affirmed that Bitcoin's halving events do serve to make the digital asset scarcer, and scarce commodities like gold and silver seem to carry higher valuations than non-scarce assets. He also pointed out that the analysis should take average price levels more seriously than its peaks because some rallies are, of course, exacerbated by fear, greed, FOMO, and news. Now, it's worth noting that this is not the first time Vitalik has dismissed the stock to flow model. In February, he called the theory post hoc rationalized bullshit, direct quote. Now, others in the community also criticized the stock to flow model. Of course, many experts have claimed that stock to flow doesn't factor in Bitcoin's demand side economics, which is actually the most important driver of Bitcoin's price. But currently, Bitcoin is valued, well, at least at the time of the original thought of this, right? Bitcoin's valued around 95, and the leading cryptocurrency has recovered over 150% from the March meltdown. But a monster bull rally and a breakout above $10,000 has not manifested yet. Of course, only time will tell whether PlanB's sky-high price targets do become a reality, and if speculation of a breakout to new all-time highs within the 12 to 18 months of the halving will come to pass roughly on schedule, or if Buterin and other crypto analysts have been right all along, and Bitcoin's price is not fundamentally based on its underlying stock to flow metrics whatsoever. Let me know what you guys think down in the comment section down below, right? Is Bitcoin's price related to its halving? Is this a thing? You know, obviously this gets brought up a whole lot. I think that for me anyways, from my opinion and from the bias that I come from, my perspective, this seems fairly logical. That is the supply side economics that matter more a little bit here than the demand side economics. And when you have the Bitcoin halving, you reduce the amount of available BTC to be able to be sold on the market. Therefore, price has to rise to accommodate that, assuming that there is consistent demand from the demand side. And as we can see from the institutional side and from the open interest side and from the, just the spread of constant adoption that we continue to see new news every single day about, that demand is there and very strong. It isn't going anywhere. So if you have consistent demand, which there has been, demand hasn't gone anywhere, and you have a reduction in supply, what is likely to happen to price? Demand overtakes supply and price moves to the upside. This raises price. So this seems fairly common sense and logical to me. As far as the stock to flow model, I feel that is extremely hypothetical, at least Plan B's implementation of it and his price targets and his analysis. Remember, it's not as if he has a monopoly on the stock to flow model. This is his personal implementation and personal model of how stock to flow should affect Bitcoin's price. There are many other possibilities of stock to flow models for Bitcoin's price on different time horizons with different time frames with different price targets. So although I don't really care about Plan B's, I've never, really thought it was that great of analysis in the first place. It is interesting, of course, and more important to just point out the market dynamics that affect Bitcoin's price on a fundamental level, which is both supply side and demand side. But again, I think that demand side is constant. I don't think we really need to worry about that. And therefore, we look at the supply side to see supply limits, and therefore demand overtakes supply to the upside. So let me know your guys' thoughts in the comment section down below. I will attempt to pick one of the best comments and talk about it live on stream. We're going to do that. All right. With that being said, it is now 1:23. We've got a little bit of time, so let's get back into the markets. And Bitcoin is rallying right along with the SPY. Price is looking good, coming right back up to the previous consolidation area and charging strongly like a bull at the gates, one might say. With that being said, let's get some of the guys on. And let's see what we can talk about today. Give me one moment.
Okay.
All right. I am joined as usual. Let's see here, actually, so I can get this up so you guys can see who I am joined with as usual. Almost. Where are you guys at? Here you guys are, right here in the Breaking Bitcoin voice channel. Boom. Cool. Looking very good. All right. As I said, joined as usual by senior analyst Alexander. Crypto Jack. We've got Dark Rico in the house and junior analyst Jason. How you guys doing today?
Fantastic on this Monday.
I'm wonderful.
Good things.
All right. All right. I gotta. I'll be right back in about 30 seconds. So stock to flow model. Go.
I have basically no opinion on, on the stock to flow model. All these economic models that people come up with are, in my opinion, just total bullshit. You take a closer look at these things, and you fill them out with huge assumptions about what people value, how the future is going to work, what the chances of this thing happening over this thing is. You're pulling this all out of your ass while you're making these models, and that's why this guy updated the model. He took out the time thing, which I mean I guess is cool, but does that mean the old model wasn't that accurate? Now this new model totally is, and he's definitely not going to update this model to a new model that's different, and then all this, like, what are we doing here?
Mhm.
So those are my feelings on stock to flow models, and you see these in the equities markets too, with with corporate valuations. You're basically, when you're filling these out, you're guessing at future revenues. You're projecting based on how you feel about the company, essentially, and like how good the team is and stuff like that. It's all complete speculation. Sorry, I didn't mean to go on a giant rant here, but
No, that makes sense. Yeah, it's definitely not one of my fortes either.
yeah,
I don't put too much weight into the stock to flow in particular, but it's fun. It's a fun little exercise to
It's fun.
to tickle your imagination, right? Where price might take us, right? It gives you at least a rough roadmap of what one could potentially anticipate if Bitcoin continues on its 10-year price appreciation trend. So, but I really wouldn't put any real weight into that. That's for sure.
Yeah, well, I feel like it's human nature to, okay, you do all this research, you build this model, and then immediately upon building the model, you become reliant upon it instead of thinking like, oh, this is one potential.
Well, it's
like,
completely
well,
biased.
I did all this research, and I feel fairly confident in my own work in this, and so I don't know. I just think we see that these models, they break down in the important points where we don't need to be breaking down. We see this in the traditional markets, we see these in traditional commodities markets, and I'm that once we have the benefit of hindsight on Bitcoin, wherever Bitcoin ends up, it won't be where the stock to flow models said it was going to end up.
Yeah, I mean, retrospectively, it's never like, well, we were close, and that's kind of the thing. It's either like we're right on or there's an excuse, And
so this guy's had multiple stock to flow models. Like what in the future he's going to be like, okay, well, actually, our second model ended up being the most correct, so we're going forward using this data. And okay, buddy.
It's kind of like now that's music 242.
Yeah.
Just keep pumping them out, version whatever.
So I think my complaints are not the same complaints that Vitalik has, because Vitalik's complaints are like, this is arbitrary, whereas my complaint is all the economic models are arbitrary. Yes, Shinobi Tekken, fundamentally, we do believe in Bitcoin as an asset. Justin is a Bitcoin maximalist.
As am I.
Nano crypto, you can shut your pie hole. No one likes nano around here. And we shame you. Shame.
Shame.
Okay. So there was one also while we're interacting with our very patient and long-suffering members. There was one guy earlier, Philson, who asked us a couple of times.
Yeah, there's a couple questions on the list here but to get to that one, Justin. Philson wanted to know your thoughts on using ADX since you're a trend following trader.
Sure. What are your grade? Okay. There's another question, which my eyes were drawn to the question about my garden.
Jordan Scott's here.
Yeah.
That was next.
Let's. Okay. So the average directional index. It's good. It's a good indicator. In fact, it's so good that I talk about it in the course. It's one of those classic things. A lot of people, I think it's a fairly popular trend following indicator insofar as they go. The only problem is, I think, with default settings, it's very, very, very restrictive to find those pairs and to find it line up with other indicators the way that I typically teach and build trading systems based off of indicators myself. But having said that, I've used the ADX before. I don't use the ADX currently in any of my models. That's not true, actually. I do like the DMI, the directional movement index, out of the, so DMI is really like two indicators. You got the bull bear, side of it, the green and the red, and then you've got the actual average directional index, which is the volatility filter. I think that there are better volatilities out there, but I think that if you don't have a volatility filter on your chart and you have the ADX, I think it's certainly a good start and to get you in that habit. And it will certainly keep you out of bad trades, because very sensitive, for example, very sensitive vol filters like Wadatar Explosion, for example, is a very sensitive vol filter. While it does help keep you out of bad trades, it does give a lot of signals, particularly with default settings. Now, what helps with that is that when you have winning streaks, you have a lot of winners, but it does mean that you will have drawdown as well, that you will take more false positive signals, which is going to happen with any system. It's just, what trade-off do you want? I tend to lean to the side of a little bit more aggressive and let my equity curve catch up over time, which it does, rather than be very, very conservative and not take as many trades and not get more exposure to the market. I know that trading involves risk. I accept that risk, and I like to trade. Having said that, I do tend to find the ADX on the daily time frame with default settings pretty restrictive. But maybe with some tweaking, speeding it up a little bit, it could give some better results. But yeah, it's a good indicator.
Yeah, I'm fond of the ADX myself as well, depending on the circumstances. I do not ever want to rely on the ADX, but I think depending on your system, it can be a good addition. There's some trend identification systems out there that are very questionable, but ADX has a good proven history of at least being a reliable indicator. It may not be like the best tool in your arsenal. You can rely on it.
Got a question here from Jalen Tolson that might be up your alley here, Justin. Why should I buy your course in Signals? First time finding this channel, and I want to know what it's all about.
Well, I mean, you can certainly do what you like. The option is there for you. I'm a free market guy, so if you find that my analysis is valid, if you find that there's value on this channel, if you think there's validity to the education that we offer, then that option's there on the table. Otherwise, you can just enjoy the show. I certainly don't. You're
going to be hard pressed to find this much free content.
Yeah. I would argue that. Yeah, that's pretty good.
Why don't you tell them about some of the stuff the premium offers between the mentorship, the proprietary indicators, the coursework. We do offer a wide range of things
and you get to hang out with me.
Yeah, to get any aspiring trader off the ground, right? So if you're looking for how to tackle the markets with a professional approach that gives you basically a winning potential recipe for how to operate as a trader. This is probably one of the most robust online courses that can do that.
My take on that would be is if you truly want to take this seriously and don't want to just be a hype boy that's looking for signals and what's going to go to the moon, how am I going to get rich quick, all that stuff, probably go out and find something else. But if you actually want to take this seriously and find a statistical edge to where you can do this for the rest of your life consistently, then you've definitely come to the right place. Because what we focus on is strategy building and getting yourself an edge in the market to where you can do this for the rest of your life, whether it be passive income or your main source of income.
Yeah, Jason's a pretty good example of that. He joined the group as a member and now is an analyst. And, it's been really, really cool to watch your progress too, man. I don't feel like I say that enough. It's been really impressive to see you put in the hours and hours of work and have it show.
It's not work, man, when you enjoy it. Like I said, I was just a regular person who started watching this show, and I was definitely missing some things from my toolkit that I picked up from CC to where now I can actually do this to where I don't feel like I'm going to burn out. I don't sit there staring at the charts all night like I used to. I can actually sleep again. And it's helped me weed out the bad trades enough to where I can consistently put up profit for the group each month.
Yeah. Yeah, I mean, we list, we got a pretty good breakdown of everything that we offer and the different packages on the website. Links in the description below. But, I'd say the core of what we do, of course, we're an education company. So we've created several different courses. They're pretty long. They're pretty robust. They need a pretty good availability of time. It depends on, I've seen people complete the course in a week, but to realistically go through and do all the testing takes several months. And some people it takes longer, right? But it's just a strategy creation process to build a strategy manually or to build one algorithmically with Pine, which is is TradingView's programming function. We have an indicator sweep package, or premium indicator sweep package that traders get access to. You see me utilize some of those indicators here on stream, like time transformation, Minx, Quadriga, ATR, among others. We do mentoring every Wednesday for about 2 hours. The entire community gets together. We do voice chat sessions at other times because we always have that voice chat that is available for people to pop into. And then I do one-on-one mentoring with clients as well, which is, it's probably, it didn't used to take up so much of my time, but now that our community has grown, it does actually take up quite a bit of my time. So I do a lot of one-on-one time.
Don't forget movie night.
Movie night's good.
And I'd suggest to anybody who's unsure, just join the free Discord and check out the community, get to know the people, and see if you like it.
Yeah,
That's the thing. I mean, it's pretty easy to tell whether you're going to like it or not. Trading itself is not for everyone. Of course, look at the numbers on people who are successful traders and who are not. I see Nano Crypto, and they're talking about how trading is the same thing as going to the casino, but I would dare you to try to get the same results we put up at a casino.
Only if I'm playing blackjack.
And Van, what does backtesting mean? Basically, what we're doing there is going over all of historical data with different indicators to try to decipher what would be our best initiator, confirmer, and then helps us weed out bad trades to get a statistical edge in the market.
Yeah. I mean, a little bit more simply, backtesting is backtesting is the process of defining, okay, this is how I'm going to trade. This is the trade setup that I'm looking for. And if I see this setup, I'm going to take a trade. So what you do is you go back in history and you look at the charts in the past and you see how would that have worked out historically. And from that, you can build up data like how profitable is a strategy? How often does it hit? And then you can take that data. If the backtesting results look good, you can take that data forward into time and see if your thesis actually holds in with live market data.
That's all part of the course, is giving you the tools to be able to do that.
Yep. If you're interested in a get quick rich scheme, this isn't the place for you because you will have to put in the work.
I hear Hex has got that get rich quick scheme. Sorry.
That's all it is. They get into the members group and all we do is tell them to buy Hex and then we're done.
That's it. Sir, what is analysis, sir? Buy more Hex. Shovel it in there. Okay, I want to answer. Jordan Stotts asked, what are your great producing crops / not so good this year? And can you tell us what seeds you use for your garden? Yeah, so this is like completely off topic, but I'm excited to answer this. So I'm a pretty big garden enthusiast. In fact, that's what I initially went to college for, was entrepreneurial and diversified agriculture. Tomatoes are doing fantastic this year. I mean, beautifully. The hot pepper plants are doing really good, but my banana pepper plants and bell pepper plants, they are a little slow. They are not growing as quickly, but which is odd because they're obviously in very similar in growth and nutrient to what I feed them anyways as tomatoes. But yeah, tomatoes doing just popping off. Bell peppers and sweet peppers not so much. With regards to what seeds I use heirloom seeds.
I was
So
about to say, are we talking heirloom tomatoes here or what?
yeah, I mean, so I do both. I mean, the majority of my seeds are like I got heirloom tomatoes from a couple different generations. I get them from a farm, actually people that I ended up going to school with, from different farms all around here. And then I also have some burpee stuff because burpee stuff tastes good too, right? So good old genetically modified slicer tomatoes, and we do it all around here. Anyone got some of that Quitch Rick schemes? That's like Pickle Rick on a Quidditch broom, right?
What?
Jordan Stott says, can the team not display their profit losses percentage from quarter to quarter? Yeah, we certainly can. We post all of our data every single month. So, I mean, in fact, I'm pretty sure we're the only group around that does that consistently, whether we have up months or down months. So check out results.crackingcryptocurrency.com. You can see our monthly trading data going back about 2 years.
And you don't have to be a member to see the results, correct?
No, that's public.
Beautiful.
But I think that's, sorry, I'm going to get off more tangent here. I think that's really important, right? So, when I was when I was in college, some of the humanitarian work that I did, although I didn't like go overseas or do anything, but I did a lot of guerrilla gardening, right? Which is where you go into urban areas where people don't think they can grow anything, and you teach individuals like how, hey, you've got an apartment in a huge apartment complex. You have what you think is no space. Well, this is what you can actually do to be slightly sustainable and grow your own food. And I'll tell you this, like, meat prices are skyrocketing. I don't think that's going to stop. We're going to see inflation hit the economy over the next few years. That's going to raise the price of goods and services, and it's going to hit the people in the lowest the lowest castes of the economy the hardest. So gardening is very, very, very cheap. It actually, once you know how to do it, it takes very little time. It is something that you set up at the beginning of the season that you just maintain throughout the season, and even depending on what kind of space and what you can do, stuff that you can do throughout winter, throughout fall, also depends on kind of where you're at and where the climate is. But absolutely a skill that everybody should be practicing. I think that people are silly if they're not becoming as sustainable as possible, knowing that we're moving forward into a future where things are going to become more and more and more uncertain, that inflation is going to continue to hammer and tank us and raise the cost of goods and services. Taking that massive cost, or I don't want to say massive cost, you still have to actually buy meat and things. We're just talking about growing some tomatoes and vegetables, but taking that cost out of your bill and then also improving your diet with fresh fruits and vegetables is the benefits are just go without saying.
Actually, vegetables can be pretty expensive at the store. I think people poo-poo the idea of how much money you're going to save by having a garden, but actually vegetables could be like the most expensive part of going to the grocery store, so you could save yourself quite a bit off your bill.
Yeah, at least here in the mid, speaking of, that's absolutely correct, Alex. Like, speaking of meat, like, $3.89 a pound, $4.50 a pound, like, was kind of the norm for ground beef. It's like $6 now. I've seen it at $10 per pound in some places, and that's in the Midwest. I'm assuming it's even higher on the coast. So I don't think that's going to change. In fact, I think that $6 a pound is probably the new normal, and probably won't be too long before it is $10 a pound. So good alternatives to that. So I'll just tell you guys what I do. So I go in with local families, and we just buy a cow from local farmers, which you can pretty much do in any state. Depends, not every single state, but just about any state. Guarantee you there's probably livestock within 100 miles of you somewhere. And it's cheaper, right? It is more cost up front, and it does require a deep freeze, but you're going to save so much money doing that. Just go buy, a quarter of a cow, half of a cow. Yeah. It's the way to do it.
And plus, it's good for your local economy.
It's good for your local economy.
I mean, when you go and buy stuff from you
see a deer on the side of the road, just drag it into the back of the truck, take it to the local butcher, do what you got to do. Hey. Venison is delicious.
Or if you see a cop pulled over for a hit deer, you can stop him and
Fry that pig up.
you can ask him to, because the cops can tag it
I was
for,
really,
you for free.
I was really worried where you were going to go with that for a second.
Now the cops can put a tag on it, so you don't have to
Right.
pay for it.
Right,
You can
right,
take it
Yep.
If you're into that.
This is real stuff.
Yeah, I had many meals as a kid. Some call it roadkill. I call it dinner.
You know, I had a roommate in college who was famous for killing every plant he ever owned.
Even a
And
cactus?
Yeah. Like,
Dude,
for real,
yeah.
he killed every plant he ever owned. And we were at a farmer's market once, and he's like, "Alex, what do you think about this tomato plant?" And I was like, "What do I think about this plant? You're gonna kill like everything that your hands touch is gonna die." And I remember he looked at me like, "I'll show you. I'll show all of you." By the end of the year, this dude had rented out like a part of the, because we were going to college, like a part of the agricultural center's like plot of land, and he had just like rows and rows of like corn and lettuce and everything. It's, even if you are the type of person who's known as basically killing everything they touch, you can learn to garden and become pretty good at it. You can.
All right, let's do this D live right here.
Okay, don't be a lemon miser,
I
Justin.
will not be a lemon miser, I promise. Let's do some distribution. Speaking of distribution, if you think that Bitcoin is distributing, check out these lemons.
We got a couple more requests here. One from Boris. It says thoughts on SLV today. Also ADA BTC for D's 514, and that's about it for questions.
Yeah, so SLV, kind of the same thing, very similar to the CFDs. I don't see any daily swing plays right here. Silver's still off limits for me. So we can see here, true strength index is crossed down, time transformation is in negative territory, still positive volume and coming back above the baseline. So as I said, kind of look at the CFD. The only play that I really see here is kind of like a reversal baseline bounce up to about, we're almost there now. So like if we actually look at ZAG USD. So look at the silver CFD. I do kind of maybe see a play up to like 1770, 1750, which gives us like a 1 to 2% play. And we could manage risk fairly tightly with the baseline right here, basically below this previous low. But not like big swing trades where I want to put a lot of risk behind it. This is still discretionary and a reversal baseline bounce territory for me right now. So maybe we'll have more data here in a few days, but silver's not a play for me right now. Very, very neutral. But
You know, that triple divergence also doesn't look that hot.
yeah, yeah. I mean, fundamentally, I'd say that the fundamentals are pretty bullish for silver. However, there is a good argument to make that gold and silver are, from a chart perspective, slightly topped out right now. But you could apply that same thing to Bitcoin. But certainly Bitcoin or gold and silver trading with more of a risk-off perspective than Bitcoin is relative to the traditional market. So
It does look like a little bit of a traditional triple top. Just offhand.
Midwest attempts, bringing it down with the lemons. The pie guy,
Every
Rhino
time.
TD, Dark Rico, and the 178. So is
For the
it,
record, people,
is it the
out there,
178
I'm not
times?
cheating. 78 times the one, or it's just 78 Jet Lis.
78 Jet Lis.
Remember that movie? The
Yeah. That was a
Very
good one. Then we had ADA Bitcoin.
Summer.
I think someone was talking about it moving right now. So
Yeah, I mean, it has pretty much retraced this entire sell-off, as has the rest of the broader market. So I don't really see anything particularly unique about ADA BTC. I mean, every chart kind of looks like this right now. ADA BTC is also neutral for me. The last trade I would have had on ADA BTC occurred right here. Actually, no, right here. And I could have held this. And here we see the time transformation sell signal right here. Prices pull back all the way down to the baseline, and we now are kind of primed for continuation, but we need to get that, right? So this is kind of the first stab back down into support. We could see a wick down pretty hard, taking everything out. But again, ADA BTC doesn't trade with leverage like that, so I wouldn't really view it like that. Yeah, I mean, we're at the previous level of support, so what you could take from here is what I would professionally call a punt. I don't see an actual trading signal as of right now.
Yeah, you're going to need to wait a little bit more.
Yeah, because I want to see if this movement if the movement continues in the broader market, then again, let me tell you how to trade altcoins. If everything's bullish, I mean, listen, this is not what we do, right? But generally, if altcoins are bullish, you can pretty much throw a dart, right? Because everything's going to move very similar, right? Especially if you kind of segregate by market capitalization and SAT value. All right.
With that, take a quick look at RVN BTC. It might be the same thing, but slay the virus. Wanted to know if you could do a quick analysis on that. It could be the same.
Yeah, I'm actually a pretty big fan of RVN BTC, but I'm out of RVN BTC right now. It's not in play for me. We see money flow is indicating that money is flowing out of RVN BTC. If we can get a couple positive closes and get price climbing above like 215, that's when I would want to take another look. I actually like Raven in general, but I'm not playing Raven right now. I played Raven off this I played a reversal off Raven right here, and I haven't touched it since. So I will let you guys know. But I don't see any play right now. Scrooge wants me to help Chaz with their garden. You know what's very interesting? One thing that I did think was funny was I did see something on the news where the Seattle, maybe it was the Seattle police chief or some just representative from the Seattle Police Department, was talking about how in Chaz they are basically taxing businesses to operate within their borders or whatever you want to call them, within their hastily erected barricades. That's what I really mean, not borders. But you know, same thing maybe. They were saying the police chief or the police diplomat, whatever was like, this is extortion. And I was like, but it's not extortion when the government does it, right? That's different. It's different. It's different when an armed force charges you money, a protection racket to operate within their borders.
Exactly. This is not extortion. This is a protection racket, and that is different.
Right.
This is your privilege.
I would hate for anything to happen to your business within the borders of the Capitol Hill Autonomous Zone.
Right. It'd be a real shame, you know, you got some real nice gardens around here.
Yeah.
Yeah, no, I'm not gonna lie. I'm not a. How do we put this? Oh no.
We're for the spirit of autonomous zones, but probably not for this particular autonomous zone.
Yeah, I mean, you know, I have to be true to my morals here, right? Like, it's very, very easy, I think, for people from my political kind of persuasion, or, you know, kind of where I tend to lean with my sympathies, to be like, oh, the autonomous zone is stupid, blah, blah, blah. You know, and I'm hearing that from a lot of, like, pundits that I usually tend to agree with. And, yeah, I mean, there's a lot of probably human tragedy going on in there right now, right? And of course the whole police force thing that they got going on there is a joke, and we could talk a lot about that. But in reality, right, like I think that individuals are free to run their own experiments. The only thing that I guess I would argue is that the businesses operating within the autonomous zone certainly did not choose to do so. And, you know, having a double, you know, kind of, you know, having a double extortion placed on them, A, in the form of taxation, and now B, on the form of a straight protection racket is something I think that we should stand against. However, individuals do have the right to attempt to do whatever they want. If you know, like Waco tried it, lots of individual places have tried it. You know, you want to, you know, inside the United States' borders, kind of section off and say your laws don't apply to us. Have fun. You know, like, and more power to you, honestly. You know, I am certainly not a fan of many of the government's policies, and I do advocate for a different future. I do advocate for a different economic model. But I think the way that we get there is education, and by gaining popular support, not from not probably, I don't think that these type of things are going to be generally productive. They just end up causing chaos, setting precedent, and kind of hurting movements. So, but they're free to do it. They're free to do it. I'm not going to sit here and tell them that, say that it can't do something, regardless of how I kind of personally feel about the situation. I think that, again, individuals are free to do what they want, but the one thing I would probably argue that they're doing that is unjust or improper that I would stand against is violating those who didn't choose to be a part of their little social experiment here, who are within those borders, and whose lives are being negatively affected. They didn't ask for this. They didn't ask to be dragged into this.
It stinks because obviously we can all agree that we don't believe in tyranny, and we think people should be, like you said, people should be free to run these experiments. But how do you do these things without kind of impinging on other people's rights at the same time?
Yeah, I mean,
in both directions.
I mean, I guess realistically, the way that you do it is the better way to do it is to attempt to go stake some claim to some virgin land and say, this is us now, right? Or maybe like pregame everybody there, right? But maybe pregame everybody like, hey, we're going to do this. We know this is going to suck, but are you in or are you out? I get what you're saying. It's very, very hard to, it's very, very hard to wrest control from a sovereign, right? Like this is why things usually end with war, because sovereign entities, nation states, governments don't just let people pop up independent cities within their borders. So they make it like from the gate, like hard. They own all the land. They usurp all the land. So you can't just go stake a fresh claim. They make it economically difficult to do so because nobody's going to fund your Chaz experiment, right? So yeah, it's It's not an easy answer. It's not something that's easy to do. And I don't really want to also, I'm always like wary of like my position, right? Because certainly when you're inside the system, it's easy to just take no action and be like, well, this is just the way it is. Haha. Mm-hmm. But at the same time, I think there's validity to that. You only get to choose one hill to die on. You know what I mean? And I think one of the problems that I see coming from young people is that they have entirely way too many hills that they're spread out across, right? I think that people should be a little bit more discriminatory about like, this is the hill I'm going to die on, right?
Probably right.
So, all right, guys, this music is getting like hardcore. Jeez. But with that being said, it is time to boogie on out of here. It's 2:00. Final thoughts, ladies and gentlemen.
Enjoy Bitcoin.
Enjoy Bitcoin.
Buy Bitcoin.
Normally I don't. Actually, no. I'm gonna have different final thoughts. So looking at the markets, it's difficult to find a place for an entry right now. I would be very wary about taking a position from this spot in any of the assets, whether, wait for daily close at this point if you have not already taken a position. And things will become more clear at that point. That's what I want to leave off. So be careful, guys.
Good points.
I'll just add to last week's Friday, considering that I was talking about the bottom feeder signals. Be patient. Don't get all psyched out. Like if you're into a trade, like let it be. Like I was of course underwater here for quite a bit over the weekend, and especially this morning when we had that dip. But now it seems that we're getting a little bit of upward movement here. It looks like that point of control might be holding on Justin's open chart there on the 45. But I mean, patience is key.
Amen. Good stuff. Good words, good counsels. Thank you guys so much. I will see you guys tomorrow.
Have a good one.
All right. Swing. Hey guys, thank you so much for joining me for another exciting episode of Breaking Bitcoin, a market update. I want to thank the team for coming on and expressing their thoughts and views and opinions. Always enjoy the conversation, good counsel, great, awesome group of guys to work with. If you guys would like to conversate with us more, please join our free Discord community at discord.crackingcryptocurrency.com. Partake of the Kool-Aid of the Bitcoin community and of the crypto trading intelligentsia, which we claim to be. If you guys have any comments, concerns, sarcastic remarks, or death threats, please leave them in the comment section down below. We will respond to them, and I will do my best to get back to you as quickly as possible. If you guys are interested in joining our community or taking advantage of any of the services that we offer as a company, whether it be our mentorship, our strategy creation educational courses, our premium indicator suite, or our trading signals, you can find all that information at premium.crackingcryptocurrency.com. Links are also in the description down below, as well as links to other things that may help you out. 3 Commas, Bybit, FTX, whatever you guys want to take advantage of. All down there in the description for your viewing pleasure. We will be back tomorrow at 12 p.m. Central Standard Time for another episode of Breaking Bitcoin Market Update to break down the markets and, break down the walls. Break down these sell walls. You know what I'm talking about. Thank you so much, everybody, for coming. If you guys haven't already, if you guys have not already, make sure to subscribe to this channel. Slap the bell icon and smash the like. Highly appreciate it, guys. I will see you tomorrow. Remember, do something awesome today. The only thing that's guaranteed is this moment right now. You're only drawing air right now. No moment is promised. And be excellent to one another. We're all in this together, and trade safely. I'll see you tomorrow. Cheers.